Sarah Borkson-Keeter with NAREITsREIT.com, and welcome to Quick Study, a monthly review of REIT market developments. I'm joined today by Brad Case, NAREIT's Senior Vice President for Research and Industry Information. So welcome, Brad.
Thank you.
So we saw REITs come back a bit in September. Was that a result of the FOMC decision earlier in the month?
It was a very strong month for the REIT market. REITs were up, the entire REIT industry was up 1.9%. Equity REITs were up to even more, 2.13% on the month. And if you compare that to the broad stock market, it was a bad month for investors in the rest of the stock market. Large cap stocks were down 2.5% on the month. Small cap stocks were down nearly 5% on the month. And because of that difference between the REIT market and the rest of the stock market, I think it's really hard to attribute that really to the FOMC announcement. I think if you look at the last 3 months, this is the third month in a row that the REIT market has outperformed the broad stock market. But for the year as a whole, REITs are still down by 4.5% since the beginning of the year. And I think that what we've been seeing more recently is really a recognition among investors that REITs had become undervalued. And so, did the FOMC, did the series of FOMC announcements over the past several months have something to do with both that undervaluation and the more recent correction of that? Yes, it's possible. But I don't think that you should put too much weight on just what happened during the month of September in terms of the FOMC announcement.
Now, some observers are saying that real estate assets may be overvalued. How would you respond to that?
Yeah, it's interesting because I just said that the REIT market may have become undervalued. I think what investors have to keep in mind is that the valuation process on the private side of the real estate market results in valuations that are lagged by about a year relative to the true values of the properties. So what we've seen earlier this year is that valuations in the private real estate market have increased very strongly, and that really represents what was happening to the actual market values of those properties last year. Whereas in the REIT market, you see, for the first 6 months of this year, you saw some substantial decline in REIT stock prices. And I think that's what you're likely to see later on this year and really in the first part of next year in the private side of the market. So is the real estate market overvalued? I would say it's very possible that the private valuations in real estate had become inflated. Whereas if that happened, it certainly was erased on the REIT side, and in fact probably went too far, and that's why, as I say, it may be that REITs had become undervalued, and that undervaluation has been corrected to some extent over the last 3 months.
Now, are there any sectors that caught your eye during September?
Most sectors did well during the month of September. Not all of them. Hotel REITs were off during the month, for example. But self-storage REITs and residential, or especially apartment REITs, were up on the order of 5 or 6% on the month. So there were pockets of weaker performance during the month. But overall, it was a strong month for almost the entire equity REIT industry, and I think that that reflects greater confidence in the macroeconomic situation, and I would say in the FOMC's management of interest rates in response to it. Remember, what the FOMC is saying is we're not ready to raise interest rates because we want to see more signs of improvement in the economy, but we expect to see those going forward. And I think investors interpret that as a healthy situation for real estate, especially given the continued suppression of new construction in really all property types nationwide.
Well, great. Thanks very much, Brad.
Thank you.
And for more news and analysis on all things REIT, please visit REIT.com.